Namaskar and welcome to our weekly commodity audiocast, the go-to destination for insights on the dynamic world of commodity markets. I'm Ravindra Rao from Kotak Securities Commodity Research Desk, and in today's episode, we'll kick things off with a snapshot of recent economic data. After that, we'll dive deep into specific commodity sectors, dissecting the latest developments and market movements. And as we wrap up, we'll cast a glance towards the horizon, providing insights into upcoming data events that could potentially sway the markets. So, buckle up as I guide you through the latest trends, market analysis, and expert insights shaping the commodities landscape. Last week, anticipation of a Federal Reserve rate cut in June has ignited positive momentum across various asset classes, propelling US equities and gold to unprecedented highs. The US dollar took a sharp dip to a 1 month low of 103.2 amid hints from Federal Chair Powell about potential interest rate cuts this year. Now, this was in the initial part of the week. Powell acknowledged the possibility of dialing back restrictive policies if signs of moderating inflation prove sustainable. However, he also emphasized that there is no rush to cut rates and the Fed seeks confidence in inflation moving sustainably towards 2%. The greenback at the end of the week further plunged to 102.36, the lowest since mid-January, as downward revisions to US job growth in January 2024 and December 2023 hinted at softening in the US labor market. On commodity specific, the COMEX gold market has been a focal point, marking its third consecutive weekly gain and surging over 4.5% to a record high of $2,203 per troy ounce. The surge was supported by tumbling US Treasury yields and the dollar index amid weak US data. Renewed concerns about the US banking sector and Powell's testimony, perceived as slightly dovish, have contributed to the bullish trend in precious metal. US economic data released in the week had indicated an economic slowdown, strengthening the case for a Fed rate cut later this year. The collapse in shares of New York Community Bank Corp further reignited concerns about the health of US regional lenders, putting additional pressure on treasury yields. Gold prices have managed to remain high as robust central bank buying has offset declining ETF outflows. So on the fundamental front, everything looks positive as of now for gold prices. And if we talk about the price action, gold has moved above the stiff resistance of $2,150, which was hit a few months back, and it is now trading well above that, and there is a possibility that it might hit the potential target of 2250, which is the initial target above 2150. However, this is contingent upon the swing support of dollar 2100 holding on a closing basis. So basically the pattern is kind of a inverse HNS, and it has given a breakout. So we need to see whether it sustains. It looks like it might sustain and the prices might move higher. But we also have to keep a watch on different developments that are happening across the globe. In case of silver, silver has also followed gold, and the prices have moved up. Looking at the price action, if you look at the international silver COMEX silver, it has moved above $24. In fact, it has closed about 24.50. Still, there is if you look at the long term charts, there is still stiff resistance near 26.50, but that is still far off. The near resistance would be the December 2023 highs near 24.89, which it has hit close to that in the previous week, wherein it hit a high of 24.86. Now, if it goes above that, then there is a possibility it might move close to $26. And if we talk about the MCX prices, first let's discuss about gold. Gold has moved above the resistance near 65,000, and there is a possibility it might move close to 67,000 in the coming sessions, but it will take some time. So 65,200 would be the support, the ideal support now, initial support, and below that 64,450 would act as the next support. In case of silver, on the on the MCX chart, it has given a very good falling wedge breakout, and there is a possibility it might move close to 75,300 in the coming week. Support is near 73,780, followed by 73,340, which might act as the demand zone, and a strong support is near 72,000, below which the pattern might fail. So we are pretty bullish, especially on silver for the week, and we expect prices might test 75,300 odd levels, provided the mentioned support holds. Coming to base metals, LME base metals also rallied in the previous week to near highest levels of 2024 on rising expectations of Fed pivot and hopes that Chinese authorities would be willing to take further steps to support growth amid the ongoing China's National Congress. Metals are likely to be supported by softer dollar in the coming weeks. However, traders' mood may swing with inclusion or absence of major new policy initiatives in key demand areas like real estate and infrastructure from China. On the price front, copper has given a kind of a cup and handle break, but it has not sustained. I would say the prices have once again it has come below the neckline resistance, and it it might take support near 730 if the prices once again moves above 735, 736, and if it closes, then there is a chance it might go up till 745. On the lower side, 722 would act as a very good support. Below that, the pattern might fail, and above 736 the pattern might confirm and the prices might go higher till 745 odd levels. And in case of zinc, prices have come above the long-term moving average, and if it sustains 217 on the downside, there is a possibility the prices might once again try to move up. Initial resistance is near 223.60. Above that, it might go to 229, 230 levels. Finally, coming to energies, WTI crude prices have surged above 80 barrels for the first time since November as OPEC Plus extended its 2 million barrels per day oil supply cutbacks until the end of June. However, the uptick was short-lived as prices once again fell to 78 barrels, with investors refocusing on demand concerns and continued build-up in US inventories. So, on the price front, crude oil, WTI crude oil is facing stiff resistance near $80, which is also an upper bound of a triangle, which it has been trading since, I would say, since November 2023. And the price broke out, but it is not sustaining. So we need to see prices sustaining on a closing basis above $80, and if that happens, we might see prices going higher towards 84, and if not, then 76.80 would act as a good support, which is the 200 SMA support. Below that, the weakness might further be seen. Otherwise, there is a possibility we might see some kind of a reversal. So 76.80 on the lower side needs to be watched out for, and on the higher side, $80 needs to be penetrated by the bulls for a breakout. So until then, we expect crude to trade in a range. If we talk about MCX, 6,390 would act as a good support, and after that 6,340. So 6,390 to 6,340 would be the ideal support zone, and on the higher side 6,330, 340 would be the resistance. Above that, we might see prices going higher towards 7,000 on a positional basis. So markets are growing optimistic that the Fed's concerns regarding inflation from a resilient labor market have been alleviated to some extent, given the increase in the unemployment rate for the first time in 4 months and easing wage growth inflation. In the coming week, the spotlight will be on the US inflation numbers. A continuation of a disinflationary trend may add to rate cut bets, boosting gold prices to new highs. Even other commodities will be supported. Conversely, a hotter than expected figure may lead market participants to discount fewer rate cuts for the year, which might be slightly bearish for commodities, especially for gold. So as we draw the curtains on today's episode, we hope you find our exploration of the commodity markets both informative and engaging. Thank you for joining us on Weekly Commodity Audiocast. Until next time, may your trades be prosperous and your investments resilient. Stay tuned and stay informed.